we cross to Singapore for the latest from Arise Asia business correspondent Sandy Huang. Hi, Sandy. So let's start with market movements. Asia stocks are mixed as the US-China trade war are keeping investors on the edge of their seats. Bring us up to speed on this.
Yes, Idia. Well, most Southeast Asian markets fell as investors remained skeptical about the trade talks. Here in Singapore, though, shares were marginally higher thanks to top lenders DBS and OCBC. Australia shares, meanwhile, ended 0.75% higher as well. That's mostly thanks to energy stocks. The sector touched an over 1-month high as oil prices rallied. Banks also lifted sentiments down under. The Aussie financial sector ending at a more than 1-month high. In Japan, the Nikkei closed up 0.8%. Shippers, machinery, and automakers were in demand, and exporters gained on a weaker yen as well. Finally, in China, shares were mixed. The Shanghai Composite lost 0.2%, while Hong Kong's Hang Seng added 0.3%. Most investors, as you said, were treading carefully as they await for more outcome from the talks between China and the U.S.
Well, Sandy, now in Japan, SoftBank has scaled back its investment in WeWork, injecting $2 billion in the office space provider, which is significantly lower than the $16 billion that was previously agreed on. Why is that?
Well, it's a combination of a few things. One may be that WeWork is just simply not making money. And for SoftBank, there is now more hesitancy and need for caution to proceed. The original $16 billion plan, as you said, would have been the largest ever investment in a tech startup. Now, the scale back shows a big shift in investor enthusiasm for tech firms, tech shares. Steep sell-offs in equity markets in recent months have really hit some of the world's largest tech companies hard. Shares in SoftBank itself have fallen 33% in the last 3 months. It suffered an embarrassing debut of its mobile phone business last month after raising $23 billion for the country's biggest IPO. They're still trading 5% below the IPO price, so it's not hard to see why SoftBank Group is taking a step back, but the world's largest focused tech investor still seems pretty bullish about WeWork. SoftBank Group CEO last month said that Japan is the startup's fastest growing market. So if a deal is finalized, SoftBank will still have pumped more than $10 billion into the company, making it one of the biggest bets on a startup.
Well, I guess that's still kind of good news for WeWork then. But meanwhile, a story making headlines. Nissan's ousted chairman, Carlos Ghosn, has made his first public appearance since his arrest. Sandy, can you tell us more on your front?
Yes, well, there is massive public interest in Ghosn's first defense since his arrest almost 2 months ago. More than 1,100 people lined up in front of the Tokyo District Court today for 14 seats assigned by lottery. Ghosn told the judges today that he was wrongly accused and unfairly detained. He also said that he never received any compensation from Nissan that wasn't disclosed. He's, of course, been charged with underreporting his income, shifting $17 million worth of personal investment losses to the car maker. Of course, this comes at a time when Ghosn, who is still the CEO of French automaker Renault, is in danger of losing key allies at Nissan. His arrest has also put Japan's criminal justice system under scrutiny. Prosecutors still have the option to arrest or detain him for another 22 days without charge, which is far longer than any developed countries. Legal experts say this is all part of a strategy to produce confession and make a trial easier. All this uncertainty is, of course, hurting shares. Nissan stocks were up 0.1% this morning, but closed down 0.2%.
Well, Sandy, over now in South Korea, Samsung Electronics is bracing for the first profit drop in 2 years. Why is that? Now, I know we have a lot to cover, of course, in this short interview, but please tell us more.
Yes, Samsung Electronics is blaming lower demand in memory chips and mobile phone markets for its gloomy forecast. It says its fourth quarter operating profit will likely drop 29%. Samsung is the world's biggest maker of smartphones and semiconductors, and the company says weaker demand from some of its data center customers are driving down chip prices and hurting earnings. While they didn't identify who these customers are, analysts say big Chinese cloud companies may have contributed contributed to that loss. Samsung's memory and processor chips account for over 3/4 of its earnings. They power smartphones, including those from Huawei. Meanwhile, LG Electronics also shares some bad news today. The world's second-largest television set maker says its fourth quarter operation profit likely fell 80% year-on-year, far below expectations. Now, earnings were likely hurt by higher year-end bonuses and marketing expenses for new smartphones, but certainly a tough start to the year for both of these South Korean companies.
Thank you, Sandy. Well, finally, China's ICBC is leading a buying spree of jets. Can you break down the numbers for us?
Yes, well, it does appear that Asian leasing companies are splashing out on passenger jets worth $25 billion at list prices. They were picking out bargains as plane makers Airbus and Boeing race to end a relatively quiet year with fresh orders. The deals for over 200 jets are expected to provide clues on how far trade tensions and economic uncertainty are dampening an already slowing aircraft market. Sources say China's ICBC Financial Leasing has ordered 80 Airbus A380 family jets worth $8.8 billion at list prices. Japan has also ordered about 165 Airbus jets. Detailed numbers will be out on Friday, and despite reports that Airbus missed its annual delivery target for 800 jets, sources still believe a positive outcome after this buying spree. Now, Boeing, meanwhile, has not announced firm orders since November, but there is demand from Chinese lessors. Hong Kong's China Aircraft Leasing posted 2 deals for 25 Boeing 737 MAX jets each. Singapore-based BOC Aviation also ordered 14 jets from Boeing and 2 from Airbus last month. Now, more Boeing data is expected later today and is still a firm favorite to retain its crown as the world's largest producer of jetliners.
Well, Sandy, thanks for joining me today to shed light on all those stories. Sandy Huang there, Arise Asia business correspondent.